Hi, this is Alex Mahoney with Coda Financial Coaching, your guide to all things budgeting, investing, and achieving financial freedom. And today I wanted to talk about a rather hilarious, maybe even borderline sad exchange that I saw on the Dave Ramsey radio show. It was actually a YouTube clip from several months back that came across my feed. And a caller called in and he was asking about mutual funds, particularly the actively managed mutual funds that Dave Ramsey advocates versus index funds and which one to invest in. And frankly, this 21-year-old caller was more educated on index versus actively managed mutual funds than the Ramsey radio show host. And basically what happened is he asked why, if index funds consistently outperform mutual funds, why we should ever invest in any sort of mutual funds. And the host George's response was, well, take a look at this article that said in 2023, over a 12-month period, the mutual funds on average have outperformed index funds. And the caller said, wait a minute, why would I care, especially if you're a show that advocates a long-term view? Why would I only care about 1 year of data? And you could kind of tell that the radio hosts were kind of stumbling through and hemming and hawing and kind of delaying a valid response. And the reason was because there isn't a valid response. Over a long-term period, only about 15% of mutual funds beat index funds. And those aren't always the same mutual funds. We're just talking about mutual funds in general. So you could be in a mutual fund this year that is beating the market, but that doesn't mean it's going to beat it next year. And in fact, the market may catch up and overcome that mutual fund in the following year. So is it really worth it? So let's first just get into what a mutual fund, what an actively managed mutual fund is versus what an index fund is. So an actively managed mutual fund just means that there is a bunch of people, maybe one person with a fancy finance degree, basically figuring out which stocks to pick, which types of investments to pick that supposedly will beat the market. And the catch is that you're going to end up paying a potentially expensive fee. You could be paying, upwards or more of 100 basis points. And that's just a fancy way of saying 100 basis points means 1% of your investment. So 1 basis point would be 0.01% of your investment. So they're also called BIPs. You might hear that in the investing world. So basically, these guys are constantly buying and selling. They're constantly trying to get an advantage over the market. And whereas an index fund is, I could go out, well, I don't have billions and billions of dollars of people that are willing to invest in me, but I could go out assuming I had the money and make an index fund. All that is basing your investment portfolio on the broader, not the broader market, but a set index that reflects a portion of the market or a broader market. A classic example would be the S&P 500, which are basically the 500 biggest companies in the US. So it doesn't take any genius to do that. Literally, you're just allocating the value of the fund according to the relative value of each stock within the S&P 500. And so it goes for the Russell Index, which is smaller cap companies, smaller companies. And then, of course, there's also total market index funds. That's another example. That's the one I prefer, by the way, where you're having both big companies and smaller companies mixed in. It's a broader reflection of the market. So that's all to say, if the index fund, first of all, the index funds by default are reflecting successful companies, especially if you invest in the S&P 500. They're big growing companies, in particular tech companies have dominated those in the last 10 years. So it's almost self-selecting, right? If a company is coming in and being successful, it's going to come into the S&P 500. So why would you need some genius manager who may not even beat the market and doesn't beat the market 85% of the time on average when the S&P 500 is self-selecting? Now, in theory, sure, a mutual or a actively managed mutual fund could beat the market at some point. But even then, if let's say a mutual fund manager is doing really well, he's killing it, he's picking stocks that are doing really well. Well, here's the thing. If people see that he's doing well, money is going to flood into his fund, and the stocks that he's doing well in are eventually people are going to be investing in them anyway. So his picks eventually are not going to be as good unless he finds other investments, and he's literally guessing the right companies to invest in 100% of the time. Eventually the market is going to catch up with his choices, whether they were educated choices or pure luck. So really, in the long run, there just really isn't any beating the market. And the more we try to outsmart ourselves, the more we try to find the next guru, we're just wasting our time, and we're causing ourselves anxiety by trying to always compare what our portfolios are doing to what other people's portfolios are doing and what the greater market is doing. So why not? I know there's a lot of money to be made on making fancy managed funds, and people do still make a lot of money on that. But why go through the stress of doing that when you know that either an S&P 500 or a total stock market index fund is going to outperform 85% of any given set of mutual funds at the time? Why not take an 85% sure thing over one thing that is only 15% sure, and it's probably only going to do that for a short run? So that's all I have for today. Really, as a coach, I'm just saying that you should always just be in an index fund. Sure, you can have your plaything stocks that are good companies on the side. But if you're really just looking to take away the stress, I don't care how smart you think you are or how smart you think a particular fund manager is. They're just going to cause you pain and stress, as opposed to going in an index that has been proven with data for over 100 years now. We have over 100 years of data. So anyways, as always, I wish you the best on your path to financial freedom. If you have any questions, feel free to comment below. Feel free to drop into my DMs. I'm always happy to help.